Okay, folks. Morning. Welcome to heckumeducation.org. This is item number 7 in our series, and this is on the cost of your reverse mortgage. And we're also going to talk about some set-asides. It's a little complex. This is just to give you a quick overview. It's not to replace counseling, but instead to complement it. All right, remember, we're a nonprofit consumer credit counseling agency. We're not affiliated with any banks or lenders, nor are we allowed to provide you specific information or opinions on specific lenders. Our relationship is one of confidence. Therefore, if you're nice enough to call us, everything that you tell us will remain between just you and us. All right. Let's talk about the cost of reverse mortgage. Well, there's basically 3 groups of costs when it comes to a reverse mortgage. And these, while you can pay for these out of your own pocket, I don't think I've ever seen anybody really do it, at least very rarely. Usually these costs will come out of the proceeds of the loan. And the first group of costs that we're going to talk about is an origination fee. Origination fee is what the lender makes to originate the loan. And all of these costs are based on the value of your home. That's the starting point. So it's going to not the value of what you think or the lender thinks or what any website thinks. It's the official, comes through with your FHA appraiser, what he determines the value to be. And so when we talk about an origination fee, it's based on the value of your home. And the calculation is that it's anywhere from $2,500 to $6,000. And the maximum that it can be is based on the value of your home, and it is 2% for the first $200,000 in value, and 1% for every dollar above that. So, English, that means your home's worth $200,000. The most you can be charged for an origination fee is $4,000. Your home's $300,000. The most you can be charged is $5,000. 2% for the first $200,000 is $4,000. 1% for every dollar, $100,000 after that, an additional $1,000. Most you can be charged on an origination fee on your home for a home that's appraised at $300,000 will be $5,000. Okay. Second cost that we're going to talk about is the cost to buy into the FHA insurance. And I say to buy in because remember, as we talked about in previous videos, they also charge 0.5%, the federal government, every year on the money that you've borrowed. But the buy-in on this FHA mortgage insurance is a straight 2% times the appraised value of your home. Your home's worth $200,000. The FHA mortgage insurance is going to run you $4,000. All right, your home's $300,000. 2%. It's going to cost you $6,000. No wiggle room here. I'm not going to be able to price shop that by any means. All right, third group of costs we're going to talk about are just that, third-party costs. You as the borrower, you're the first party. The bank is the second party. Everybody else is the third party. Examples, well, definition of a third-party cost are costs associated with closing a reverse mortgage in your localized area. Examples of third-party costs would be possibly the reverse mortgage counseling, possibly the appraisal, okay? Possibly your state has a mortgage tax or a filing fee. Maybe you're going to need to have title insurance. Maybe you're going to need to have a title search. Maybe hazard insurance. Okay? Possibly an inspection is going to be needed. Those are all of examples of third-party costs. And what they're going to do is they're going to take those 3 costs and they'll give you an exact number of what your reverse mortgage is going to cost you on a form at the closing table. It's called a HUD-1. Highly recommend that you see our other video on HUD, that we have one exclusively on HUD-1s. Those exact numbers will be made available to you in your HUD-1 about 24 hours before your closing, because keep in mind some of these costs change daily or they're per diem. So it's not going to be available to you until just before your closing. We also want to talk real quickly, backtrack here on some of those third-party costs. You do have the ability in a lot of situations to pay for some of those out of your pocket. Your lender or actually the appraiser may require payment before he creates the report. So you might find yourself in a situation that the FHA-approved appraiser needs to be paid for his services before you can even really get into the reverse mortgage process. And that kind of doesn't make sense. It's the way it is. And that cost is probably going to be about $300 to $400. Really depends on where you're at in the country. When we talk about costs, that's pretty straightforward, I think, those three. The next group that I want to talk to you about is called set-asides. And perfect example of a set-aside is a monthly servicing fee. And servicing fees are common on loans. Usually they're an add-on to the interest rate, okay, with like a regular mortgage. But with a reverse mortgage, because it's a rising debt, falling equity type of structure, look at our other videos, what that means is if the servicing fee was an add-on in the latter years of your loan, the servicing fee would be a really great amount, or would be an amount that keeps growing. So the federal government stepped in a long time ago and said, let's make it a fixed dollar amount. All right. It changes from product to product. You really need to talk to your lender on this one, but let's hypothetically say that range historically was always $25 to $35. So what they do is they figure out what your monthly servicing fee is going to be, is the fixed dollar amount. And let's just say for the case of an example here, it's $35. They take enough money or equity out and put it aside, kind of like putting a slice of pie on the top shelf so you can't get to it. And then they take a $35 a month bite out of it each month. And there will be enough money put aside based on the age of the youngest borrower to get to about 100 years of age. Okay, it's not an expense until that equity gets converted to cash to pay the monthly servicing fee on the first of the month. And that amount that it would be based on whatever your fixed dollar amount is. You sell the home, or you both pass away before all of that equity has been used up as monthly servicing fee, you're not going to lose anything. That equity just melts back into the house. Okay. Good for you. You outlive it. Beyond 100 years of age, you're not going to start requiring to take some money out of your pocket every month to pay for a servicing fee. Instead, the federal government will come in and pick up the servicing part of your loan, and they'll pay the servicing fee for you. Okay. There are also set-asides for repairs. That's if the appraiser deems that something needs to be done to make your house up to the FHA's minimum standard of living, whether it's a hole in the wall or maybe flaking paint, maybe some electrical issues, roof maybe. If that amount of those estimated repairs is less than 15% of your home's value or the maximum claim amount, all right, you can do the reverse mortgage and they'll put that amount of money aside. Example I love to use, let's say your home is worth $300,000, all right, throw that off the table. But you have repairs of that the appraiser estimates as $10,000 to get done. So what they would do is they would take $15,000 in equity and put that aside and do the repairs. You do your reverse mortgage, take that $15,000, put it aside, and your repairs would get done from that money. It has to be done, don't quote me on it, but within 12 months. Make sure you get them done, by the way, folks. Don't find yourself going into default because you don't do the needed repairs. It has to be a licensed contractor that does them. There are inspections. There is a small fee that the servicing company can charge you for managing that repair set-aside fee. The additional cost, just so you know, that $5,000 in the example I used, $10,000 in estimated repairs, they put $15,000 aside. It's just in case when they get into the project, something else needs to be done, or maybe the cost of materials goes up, whatever it may be. That's the repair set-aside. All right, we talked about servicing set-aside, repair set-aside. The only other set-asides are if you want to set aside money for property taxes and insurance. Hey, real quick, keep in mind an issue that's coming down the pike. A lot of these loans now are fixed rate products because they offer more cash and values have dropped. So people go after the ones that issue more money. You cannot do a repair set aside on a fixed rate product. Okay, it has to be an adjustable rate loan. So keep in mind, if you've got something that needs to be done and you're talking about the loan officer that some repairs need to be done as well, and you're looking at a fixed rate product, well, by the time it comes to closing, someone's going to catch up with it. It's not your loan officer's fault so much because it's something that's new. Repair set-asides only on an adjustable rate product. Same thing with the set-asides for property taxes and insurance. Adjustable rate product only. Servicing fee, both loans, or it's offered on, or it's there for both loans. There's a lot of changing right now in the reverse mortgage world. Contact your lender to see, how their set-asides and servicing fees and origination fees will affect you. Again, folks, any questions or concerns on how we can help you with a reverse mortgage, educating you or your family members, don't hesitate to give us a call. Thanks a lot.